Hi everyone, this is Victor here. Welcome to the Intelligent Investor channel. Nvidia stock was one of the best performing semiconductor stocks in the past 5 years. It's also one of my favorite stocks for long-term investing. In fact, the stock increased as much as 1,359% in the past 5 years, which means the stock was a 14-bagger in the past 5 years. In comparison, the S&P 500 index increased 106% and was a 2-bagger during the same period. In this video, I'm going to talk about is Nvidia stock still a buy and what is Nvidia's fair intrinsic value. I will cover these topics in this video. How Nvidia earns its revenues, Nvidia's 2 long-term growth catalysts, 3 major risks you should know about, what is Nvidia's fair intrinsic value per share, and am I buying Nvidia stock? If you like this video, smash the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and portfolio analysis videos every week that will help you become a great investor. Also, if you like this channel and want to support it, check out my Patreon blog and become a VIP patron. You'll be able to follow all the stocks I'm buying for the long term. Also, you'll be able to download the latest intrinsic value calculators for all the stocks I'm analyzing, so you know when a stock is currently overvalued, fairly valued, or undervalued. The link is in the video description. Take a look, let's start. If you're a PC gamer like me, you will know that Nvidia is the leading graphics processing unit GPU maker in the world. Nvidia is known for making the best high-performance GPUs for gamers, 3D artists, creative designers, IT professionals, and researchers. In addition to Nvidia's high-performance GPUs for desktop PCs and gaming laptops, Nvidia has expanded to other products such as RTX graphics cards for workstations, AI systems for data scientists and researchers, upcoming ARM-based Nvidia Grace CPU for AI training and high-performance computing workloads, Bluefield data processing units, DPUs for data centers, A100 Tensor Core GPUs for data centers, Nvidia Drive System for autonomous driving cars, GeForce Now Cloud Gaming, and Nvidia Omniverse, which is a real-time simulation and collaboration platform for 3D production workloads. Nvidia has many other products and services, but we will focus on the ones that drive the most revenue. Nvidia has 5 business segments: gaming, data center, professional visualization, automotive, OEM, and other. If you look at this revenue by business segments here, you can see Nvidia earns the most revenues from gaming and data center. Both business segments have a lot of growth potential. I will talk about their growth catalysts later on. Nvidia currently has high revenue growth, operating income growth, and earnings per share growth rates. It also has a high operating margin. This is why the stock outperformed the S&P 500 index by a large margin in the past 5 years. For example, according to the recent Q2 earnings release here, its total revenue increased 68% year over year. Operating income increased 275% year over year, and diluted earnings per share increased 276% year over year. Operating margin was 37.6%. In terms of business segments, Nvidia's gaming revenue grew 85% year over year. Data center revenue grew 35% year over year, and professional visualization revenue grew 156% year over year. This is the important part. If you look at this here, you can see Nvidia has very consistent operating cash flow and free cash flow growth each year. Nvidia has high free cash flow because its capital expenditure, CAPEX, is much smaller than its operating cash flow. The biggest reason is that Nvidia is a fabless semiconductor company. Nvidia does not have its manufacturing plants for chip making. Instead, Nvidia designs its chips and outsources its chip production to TSMC and Samsung Foundry, the 2 largest semiconductor foundries in the world. Nvidia also has a very healthy balance sheet. For example, it ended the quarter with 19.7 billion in gross cash, 12 billion in debt, and 7.7 billion in net cash. This means Nvidia can in theory pay off all its debt and still have 7.7 billion in net cash left. When we're investing in stocks, we have to be forward-looking and look at the business future economic prospects. So let's talk about Nvidia's 2 long-term growth catalysts. I believe the first major growth catalyst for Nvidia is the increasing demand for high-performance GPUs for consumers and professionals. As you may already know, there's an enormous demand for PC gaming, esports competitive gaming, game streaming, and console gaming. Nvidia CEO Jensen Huang said the number of PC gamers in the world grew substantially, 20% last year. Because of the pandemic that started in 2020, more people are playing video games, buying gaming PCs that need high-end CPUs and GPUs, and playing online games with friends. As of now, the GPU market is a duopoly. There are only two companies that make high-performance GPUs for gamers and professionals. There are Nvidia and AMD. Intel is planning to release its discrete Arc GPU in Q1 2022 to compete with Nvidia and AMD, but rumors suggest that it will be comparable to Nvidia and AMD's mid-end GPUs, not their high-end GPUs yet. As of now, most PC gamers either buy their discrete GPUs from Nvidia or AMD, depending on their budgets. If you look at the Steam hardware survey here in July 2021, you can see most gamers use Nvidia GeForce graphics cards to play their PC games. This means AMD graphics cards market share is much smaller compared with Nvidia's graphics cards in July 2021. According to this article here, Nvidia's discrete GPU market was 83%, and AMD's discrete GPU market share was 17% in Q2 2021. So this matched the Steam hardware survey I just showed you earlier. What is interesting is that Nvidia's discrete GPU had gained more market shares from Q2 2020 to Q2 2021. There are several reasons. One main reason is that Nvidia's top-end GPUs tend to have higher performance, better tech, and more gaming features than AMD GPUs. For example, at the time of making this video, Nvidia's GPU's ray tracing and deep learning supersampling (DLSS) tech are better than AMD GPU's ray tracing and Fidelity FX super resolution tech. If money is not an issue, most gamers will buy top-end GPUs from Nvidia. According to this article here, you can see many top-end GPUs are Nvidia's RTX graphics cards. Right now, gaming laptops are becoming very popular. If you look at this best gaming laptops article here, you can see most of these gaming laptops use Nvidia GeForce RTX GPUs. Nvidia management said in the recent Q2 earnings call, Ampere has been our fastest ramping gaming GPU archetype on Steam, and the combination of Turing and Ampere RTX GPUs have only upgraded about 20% of our installed base. 80% have yet to upgrade to RTX. Ampere RTX is Nvidia's current GPU archetype. That's ray tracing and that uses AI and deep learning to improve graphics and frame rates in gaming. In my opinion, Ampere RTX with ray tracing and deep learning supersampling DLSS tech are one of Nvidia's biggest competitive advantage. Nvidia management also said, and the audience for global esports will soon approach 0.5 billion people, while the number of those who live stream games is expected to reach over 700 million. The number of PC gamers on Steam is up almost 20% over the past year. So we're seeing strong demand in PCs, in laptops, in workstations, and cloud. And so RTX is really doing great work. Our challenge there is that demand is with so much growth in supply, and then as closely we'll do supply constraints. Crypto mining is still very popular, even if it's not as profitable as before. Crypto mining actually increases the demand for Nvidia GPUs because most crypto mining requires high-performance GPUs that have higher hash rates. As of now, workstation RTX GPUs with real-time ray tracing are becoming very popular. One reason is that more professionals are working from home. This is why Nvidia's professional visualization revenue increased 156% year over year in the recent Q2 quarter. I believe the second major growth catalyst is the increasing demand for data center GPUs. As far as I know, most data centers, especially the largest cloud providers, need GPUs to accelerate workloads such as data analytics, cloud computing, cloud gaming, AI training and research, machine learning, deep learning, high-performance computing, edge computing, networking, and virtualization. If you look at this server system list here from Nvidia, you can see all these servers use Nvidia GPUs in addition to Intel and AMD server processors. According to this cloud services provider list here, you can see the largest cloud providers use Nvidia's data center GPUs and services. These largest cloud providers include Amazon AWS, Google Cloud, Microsoft Azure, and IBM Cloud. Also, this partner service list from Nvidia shows the major vendors using Nvidia data center GPUs to build their servers. This is from Nvidia's Q2 earnings call. It shows the enormous demand for Nvidia GPUs used in data centers, especially in AI applications. Nvidia's management said, let me turn to the outlook for the third quarter of fiscal 2022. We expect another strong quarter with sequential growth driven largely by accelerating demand in data center. In addition, we expect sequential growth in each of our 3 other market platforms. Gaming demand is continuing to exceed supply as we expect channel inventories to remain below target levels as we exit Q3. Moving to data center, revenue of $2.4 billion grew 16% sequentially and 35% from the year-ago quarter. The year-ago quarter, which was our first quarter to include Mellonix, growth was driven by both hyperscale customers and vertical industries, each of which has record revenues. Our flagship A100 continued to ramp across hyperscale and cloud computing customers, with Microsoft Azure announcing general availability in June, following AWS and Google Cloud Platform's general availability in prior quarters. Customers are also turning to Nvidia GPUs to take AI to production and shifting from CPUs to GPUs, driven by the stringent performance, latency, and cost requirements of deploying and scaling deep learning AI workloads. All this suggests that there is a huge demand for Nvidia data center GPUs that specialize in AI and high-performance computing. Let's talk about the risk. I believe the first major risk is obviously increasing competition with AMD and Intel. In the discrete GPU market, it's currently a duopoly between Nvidia and AMD. Nvidia is the market leader in GPU with a market share of 83% compared with AMD's 17% in Q2 this year. Intel has been out of the discrete GPU market for many years. Now Intel is planning to release its discrete Arc GPU in Q1 2022 to compete with Nvidia and AMD. In my opinion, I believe it will be very hard for Intel's upcoming Arc GPU to compete with Nvidia and AMD because Intel's Arc GPU is expected to be a mid-range GPU comparable to Nvidia's current RTX 3070 and AMD's RX 6700 XT GPUs. In comparison, both Nvidia and AMD will be releasing their next-gen GPUs later next year. AMD is Nvidia's biggest competitor in the discrete GPU market for consumers, professionals, and data center customers. AMD's upcoming next-gen RDNA 3 GPUs are rumored to be more power efficient than Nvidia's next-gen GPUs that will release later next year. If this is true, AMD's next-gen GPUs may be able to take more market shares from Nvidia's next-gen GPUs. Of course, no one will know until both Nvidia and AMD release their next-gen GPUs later next year. Also, we need to consider the current global chip shortage. The demand for high-performance GPUs is currently much higher than the supply. If Intel has enough Arc GPU supply next year, it can take small market shares from Nvidia and AMD in the discrete GPU market. I believe the second major risk is the current global chip shortage that is affecting all companies, especially the fabless semiconductor companies such as Nvidia. I mentioned this earlier, Nvidia outsources chip production to TSMC and Samsung. Nvidia's management said the company is supply constrained in its gaming business in both desktop and notebook. Nvidia's management also said the demand for gaming GPUs far exceeding the supply. If the global chip shortage continues, this means Nvidia's revenue growth will be impacted. Nvidia will likely raise its GPU prices. I believe the third major risk is Nvidia's ARM acquisition. Nvidia is seeking approval from the European Union to acquire ARM. ARM is the most popular chip architecture used in almost all mobile computing devices such as iPhones, Android phones, and tablets. Now, ARM is expanding to servers to compete with Intel's x86-based processors. Nvidia acquiring ARM is already priced in Nvidia's stock price. If antitrust regulators from UK, Europe, and China do not approve of Nvidia acquiring ARM, I believe Nvidia's stock price will have a small correction. Now let's talk about Nvidia's very intrinsic value. First, I define Nvidia's intrinsic value as its future cash flows discounted to the present day. Nvidia generates very consistent free cash flow each quarter, so we're going to use Nvidia's free cash flow growth to estimate its very intrinsic value. These are the key assumptions I use to calculate Nvidia's very intrinsic value per share. The discount rate is 8%. This is the cost of equity calculated by Finbox.com. I believe Nvidia's free cash flow will grow at a compound annual growth rate CAGR between 30% and 50% over the next 5 years. To calculate the terminal value, I have used these two models, the perpetual growth model and the exit multiple model at the end of year 5. Then I take the average of both models to calculate the terminal value. The shares outstanding are from Morningstar. Let's go over these 3 case scenarios, the worst case, the normal case, and the best case case scenarios. Under the worst case scenario, we're using a compound annual growth rate of 30%. If we project Nvidia's free cash flow to the next 5 years and discount the free cash flow to the present day, Nvidia's intrinsic value should be $407.54 billion for the whole company. And if we divide this by the shares outstanding, then Nvidia's intrinsic value should be around $163 per share. Under the normal case scenario, we're using a compound annual growth rate of 40%. If we project Nvidia's free cash flow to the next 5 years and discount the free cash flow to the present day, Nvidia's intrinsic value should be $580.87 billion for the whole company. And if we divide this by the shares outstanding, then Nvidia's intrinsic value should be around $232.35 per share. Under the best case scenario, we're using a compound annual growth rate of 50%. If we project Nvidia's free cash flow to the next 5 years and discount the free cash flow to the present day, Nvidia's intrinsic value should be $809.93 billion for the whole company. And if we divide this by the shares outstanding, then Nvidia's intrinsic value should be around $323.97 per share. Personally, under the normal case scenario, I believe Nvidia's current fair intrinsic value is around $580.87 billion for the whole company, or $232.35 per share. This means I believe Nvidia's stock is either fairly valued or slightly undervalued at the time of making this video. So will I be buying more Nvidia shares? Yes, I'll be buying more Nvidia shares because I like Nvidia's business. I like its market leadership in the GPU business in both the consumer and data center markets, as well as its leadership in AI. I already have Nvidia shares in my portfolio, but I will continue to buy more Nvidia shares if the stock drops well below its fair intrinsic value. Under the normal case scenario I mentioned earlier, I believe Nvidia's current fair intrinsic value is around $580.87 billion for the whole company, or $232.35 per share if Nvidia's free cash flow grows at a CAGR 40% over the next 5 years. Now, all these estimates are only my opinions and analysis based on my research. They are not financial advice. Make sure you always do your research and do your extra due diligence before investing in anything. If you like this video, smash the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and portfolio analysis videos every week that will help you become a great investor. Also, if you like this channel and want to support it, check out my Patreon blog and become a VIP patron. You'll be able to follow all the stocks I'm buying for the long term. Also, you will be able to download the latest intrinsic value calculators for all the stocks I'm analyzing, so you will know when a stock is currently overvalued, fairly valued, or undervalued. Thank you for watching this video. This is Victor from the Intelligent Investor channel, and I will see you in the next video.